As you guys probably know, one of the community managers over here at Octane Labs building Arbitrum. Hunter is my name. And today we are speaking with Gains Network, specifically Seb, the founder of Gains. Seb, everything is going well, yes?
Yeah, it's been great. It's been a crazy grind in the last few weeks on the new Vault and on Arbitrum. So, yeah, I'm really excited to talk about all of this with you guys.
Oh, yes. Who doesn't like talking about decentralized leverage trading? This is pretty much the bread and butter of our industry. So today's going to be great. I think just for those who may not be familiar with Gains, since I know you guys are coming from actually another ecosystem, can you just give us like a TLDR of what Gains Network is?
Yeah, so Gains Network is building G-Trade. We are one of the OGs decentralized leverage trading platform. I think, yeah, it's almost 2 years now since we exist. So we've been there quite for a long time. And so, yeah, we're building G-Trade, which is already live on Polygon right now. It's a synthetic decentralized leverage trading platform powered by our custom Chainlink decentralized Oracle network, which basically lets people leverage trade on cryptos, forex, and stocks using the median spot price and using low to high leverage. So we have the biggest offering of pairs of any decentralized leverage trading platform right now, as well as the highest leverages available. And that's thanks to our synthetic architecture, followed by our Chainlink Dawn, which we use to fetch the prices in real time for each trade, and also our DAI Vault, which is basically the counterparty to all trades happening on the platform, which means, for example, if you open a trade and you lose, your DAI will go into the DAI Vault, and if you win, your profits will come from the DAI Vault. Yeah, so that's a summary.
We're definitely going to get into more into some of the weeds of how things work, but just for some clarification there. So Gains Network is maybe the team, and then G Trade is the actual product, or am I not understanding that correctly?
Yeah, that's correct. Gains Network has the GNS token and the team, and is building G-Trade, and maybe we're going to build new products after G-Trade, like I don't know, a casino or options or anything that we find we could offer a good solution on. So yeah, Gains Network is really the GNS token and the team, and soon a governance.
Ooh. Oh wow, we're getting deep into the alpha here already. I didn't even mean to do that. Um, that's great. So in that case, then it probably makes sense to maybe dive into just a little bit more so about like how G Trade works. As you said, that's what's been live on Polygon for a while, and I guess what's coming to Arbitrum, right?
Yeah, correct.
Yeah, please. G Trade, if you can get like a little more specific on it and how it works. I know you mentioned a little bit about the Chainlink Dawn and a couple of things about the vault, but yeah.
Yeah, I can go into more details now. Um, so what really makes us different from other trading platforms? Traditional trading platforms, centralized or decentralized, by the way, work using order books. So that means you have liquidity for each pair in an order book. So you have some asks and bid by price. And when you do a market order, for example, it just fills your order, moves the price depending on the liquidity, etc., etc. So you really build liquidity for each pair, and you generate your own price. The big difference with synthetic products such as G-Trade is that we do not build our own price, and we don't have liquidity for each pair. We directly use, for example, for cryptos, we use the median price of 7 exchanges. For stocks, we use the median price of 5 APIs. Same for Forex. So we do not need to find liquidity providers for each pair, and that's our biggest strength, because we can just literally list anything that we have a price feed for, set up the fees and everything, the parameters, to make sure it's not too risky for the vault, and then we can immediately open trading on it, because the way it works is it just calculates your P&L. So you open a trade, then you close it. It just calculates the price difference between where you opened it and where you closed it. And depending on the leverage and the price difference, it will calculate your P&L, and depending on your collateral size too. And then it will just send you DAI if you want, or send your DAI to the vault if you lost. It's really as simple as that. So yeah, it's really, really, really liquidity efficient. That's the main keyword. Because one, we do not need to build liquidity for all pairs individually. And two, only the collateral goes through the liquidity. We don't, like, for example, when we have a 10K trade at 100x, that's 1 million DAI position size. It really doesn't change anything compared to a 10K trade at 2x leverage. The vault doesn't care. You won't get, we don't need to build strong order books that need to support this high leverage. We can just offer it straight. So that's our biggest strength.
I'm wondering if you can. Oh, sorry. Were you going to say something else?
No, I think.
Okay.
Yeah.
Okay. Okay. Good. No worry. I thought I heard something. I was going to say, if you can maybe can you maybe expand a little bit on the order book side of things? And I only ask because I know that's been kind of like a topic of contention for some of the community within leverage trading. Like how some products have on-chain order books and some of them don't. I know like that, for example, that I think that was like a big reason why DYDX chose to maybe leave the kind of Ethereum ecosystem and go to I think the Cosmos one. But I'd love to hear maybe a little bit about y'all's thought process behind how the order book works.
Yeah. So basically, I think so. We use spot liquidity for our oracles, and I just think that spot liquidity is an entirely different product. That's interesting as well, and creating order books uh, and liquidity for all pairs, so that you can really exchange the underlying asset. I think it's very important, and it's a very interesting use case. And it's also important that we have that in the decentralized, in the DeFi ecosystem. But that's not really what we're targeting. What we want is leverage the liquidity on these spot exchanges to offer a derivative on it. So rebuilding liquidity for each pair to me just looks like an unnecessary bottleneck. And yeah, that's basically our approach. But projects that try to build liquidity on chain, we obviously don't criticize that, because it's very important as well that we have strong exchanges, decentralized exchanges. So that so for example, currently we don't use any decentralized platform for our oracles, but when the liquidity becomes great, we can, for example, add I don't know, for example, we find that on UniV3 there is a pair that has a lot of liquidity, and we could leverage it. We can add it into our oracle, or any other project really that builds liquidity on chain. But yeah, that's not really the use case we're going for, and I think it's it's a bit more efficient, to leverage that liquidity to offer a derivative on it, which is the main goal. So yeah.
Awesome. So I guess in a nutshell, it's like, I mean, there's obviously different ways to do things, but you know, you guys chose that specific way, and maybe even are able to leverage kind of like some like Uniswap V3's kind of I guess oracles in a way, like TWAPs, to maybe back the current system that you guys have. Did I understand that correctly, or?
Yeah, right now we're not using UniV3 oracles, but I mentioned it as a possibility that we can really use any spot exchange price into our oracles, whether centralized or decentralized. It really doesn't make a difference.
Great. Yeah. No, I think and the only reason why I ask is I know that like as a lot of people who maybe do DeFi and Arbitrum currently know, like there are like a lot of different flavors of different of like leverage protocols that live
Yeah.
on it. So I'd love to kind of get into the details, but like, okay, like this is kind of what differentiates one project from another. So I really appreciate the clarity there.
Yeah, no problem. And by the way, I'm not criticizing any other approach or anything. I think everything is interesting, and it's great if we have many projects taking different approaches. I think it's only better for the ecosystem.
100%. I couldn't agree more. So I think like on that note, I mentioned a little earlier, and you did too. And obviously, you guys have been on Polygon for a while. You're moving over to Arbitrum One with this launch. Can you maybe kind of shed some light on some of the assets that you guys currently list on maybe some that you plan on listing on launch?
Yeah, so basically everything we have on Polygon will be available also on Arbitrum. So stocks, forex, cryptos, and another asset class that we're going to add soon. So yeah.
Am I going to be able to trade like? I think like at some point during COVID, like I think the thing that popped up the most was like wood. I don't know if that's was it wood or was it like I don't know if I'm getting this right.
Oh, lumber futures, I think something like that. Yeah,
Yeah,
we don't we we don't have commodities yet, but we plan to add them also in the following months.
I think an additional thing that a lot of people look forward to when coming to Arbitrum is like, okay, like you're launching, you're settling yourself in the neighborhood, but what about the neighbors? What about the different projects that you guys plan on maybe speaking with or talking to, or maybe even integrating with? You don't have to give me too much alpha here if you don't want, but are there any kind of collabs that you guys have publicly announced this far when you do launch on Arbitrum?
Yeah, there's nothing public yet, and we won't have any significant partnership on launch. But the thing is, I really think Arbitrum is a beautiful ecosystem full of smart people building really great stuff. So I'm confident we will be well integrated pretty soon, especially with our new vault, which I will reveal one or two details on during this AMA, which until now were a secret, by the way. So that's some alpha.
Oh yes, yes, this is great. In that case, can we move over to that? I mean, I was going to ask you a little bit about the tokenomics behind GNS, maybe first, but what do you think? What do you want to hit first, the vault or that?
Let's keep the vault for slightly later.
Okay, perfect. Yeah, that's fine. That's fine. No worries. I'm just going to be sitting here waiting. Yeah, no. In that case, let's definitely dive into a little bit of the tokenomics you guys have behind the GNS token.
Yeah, so it started as a token on Ethereum. It was called GFarm 2, and I think it's quite obvious why we changed the name. It was not really great. So yeah, now it's better reflects the quality of what we're working on. And so it was fairly distributed in liquidity pool where you stake GFarm2 and Ethereum liquidity, and also a GFarm2 pool. So the token is 100% fairly distributed. The team got 10% of the tokens minted also during this distribution phase. Then we migrated to Polygon, and so right now the GNS token basically powers the. It's a very, how to say, it's a way to make the vault more efficient, and also you can stake it to get a share of the trading platform fees. And soon, of course, is going to be the governance token. So the way it's integrated into the DAI vault, to me, it's important that it's not only it's not just a token for the sake of being a token. It's really used within the trading architecture. So we use it as a way reward ecosystem participants by sending DAI into our vault. So it might sound a bit complicated, but it's a really interesting way to support the collateralization of our vault while not creating a long-term net inflationary pressure, because that DAI will go into the vault to make it to refill it, which will make the collateralization ratio higher. But the DAI vault burns GNS also when it's over collateralized. So it's a really well balanced system made to support its over collateralization. And then once it's over collateralized, it burns GNS. Because the negative PNL from traders goes into the DAI vault, and currently above a certain threshold, it's used to buy and burn GNS. That will change a bit, but I didn't plan on telling the change on this. I will tell a few other things about the new vault, but not. I almost said it. I need to be careful. So we use it as a way to, if we want to raise capital on the DAI vault, because that allows DAI to flow into the vault. And for example, our ambassadors who have referral links or our NFT bots, they get the GNS. So they get rewarded by minted GNS, and the equivalent amount of DAI is sent into the vault. And then when it's over collateralized, it buys and burns GNS, which is long term, not inflationary, of course. In fact, we started at 38.5 million supply. Well, it was 38.5 kg farm2, but it's a 1 to 1000 token split. So that will be 38.5 million GNS. And now we're at about 30 million supply. So we burned quite a lot of GNS this way.
This may sound like, I don't know, a dumb question, but is there like a fear that too much GNS is burnt? And maybe this kind of feeds into the you guys changing your vault a little bit, but like, I mean, I think that's like a quarter of the supply almost, right?
Yeah, I think it's a nice problem to have. No, for real, I don't think it will be an issue. If we burn too much GNS, price goes up, and you burn less GNS. So eventually, it finds an equilibrium, and the moving variable there is the price that can adjust.
No, yeah, no, I totally hear on that. I think that's definitely the. I guess like always hearing about how different projects handle tokenomics is very interesting because I'll be honest with you. I mean, I've been in crypto for like a couple of years now. I've been playing like online games for a long time as well, and obviously each thing has their own economy, whether it's real money or not. And like I've never seen like a system that like the entire time has just been like 100% like spot on with its tokenomics. Like I should say by that is that it's like it's really hard to make a working economy. I mean, even in the real world, our economies are kind of a mess with the politics and all that. But
So
it's really interesting to see how protocols go about kind of handling their tokenomics.
yeah, yeah. So our tokenomics are mainly one. It's deeply integrated into the protocol itself. Like the trading platform wouldn't be what it is without the Genius token. We need it to be able. I was about to give some more alpha. I really need to stop. Okay. So it's deeply integrated into the trading platform. That way we can raise capital for the DAI vault in an efficient manner while still rewarding ecosystem participants and incentivizing them to do what we want. And long term, it's net neutral and it's even deflationary because then we burn the overcapitalization of the vault. And there's also, of course, the single-sided staking of Genius that captures currently about 30% of the platform fees. And that's basically the main incentive that people will have to take great decisions for the protocol. Because then if they take good decisions, they earn more fees. So, it's all about building incentives. It's not just about uh, building a token for the sake of making a token and trying to make it work. That's the wrong way to go. Like we're really trying to build a solid governance and solid products. And then the token plays into this and it's perfectly well integrated. And everything has a reason. It's not like it's not like we said maybe if we do this burn it will make the token pump. I don't know, or we didn't improvise stuff like that. It's everything is perfectly well. Everything has a reason basically. Whereas most other tokens, you're like, why do you even exist? So yeah.
Spicy words there, spicy words. No, I hear you. I definitely hear you on that. Are you able to maybe shed a little bit more light on the sounds like upcoming kind of DAO structure that you guys have planned? Do you think it'll be like a traditional DAO where are you able to kind of just vote on proposals that the community kind of throws in, or do you guys have like I don't know like any type of like alpha there? I guess in terms of governance.
Yeah, it's slightly too early to be honest. We're really focused right now um, on building the protocol as fast as possible and adding all the important features and making it perfectly sustainable and optimized. And then we're really going to look into decentralizing the actual work and operating the project. Because at this point, it's really important to have a team that builds fast, as fast as possible. But then once things are like 99% done or 95%, then having not having a governance becomes a bad trade-off, and then you better have a governance. And even if it moves a bit slower, it's worth it. But right now, it's not a good trade-off.
Totally hear you on that. And funny enough, I think we were having actually a similar conversation yesterday on the other AMA where I think I had mentioned that, and I think there's definitely like there's definitely a sweet spot with obviously having control over protocol, but by the community, and still being able to ship at a reasonable rate. Because obviously, as members of the community and as members of the protocol, I think everyone wants fast shipping, obviously. But the question is like, how fast can people come to consensus on certain things that really impact the core protocol itself? Is obviously it's always like the main question, frankly. But definitely interested to see. We'll be keeping an eye when that comes out for sure.
Yeah, until now, to be honest, we've been really working on foundational stuff. Like V6.1 was a risk management update that was very, very important. That allowed us to have more parameters manage the risk we take on each pair, price impact, funding fees, or other fees, so that we have a really great toolkit to manage our risk. And pretty much everything we've worked on right now has been really creating the foundation for everything else. And this update with the new vault is once again it will be, I think, the most important building block for G-Trade and for Gains Network for the next coming years. So yeah, it's not like we are adding a few features here and there. We're really still making incredible progress on really important stuff. But I'd say in like 6 months, something like that, most of the really important stuff that has a lot of impact should be pretty much ready, or something like that. So then I think it will become interesting to gradually add more decentralization of the building of the protocol itself. But by the way, the trading platform itself is fully decentralized. All orders happen on chain and they are powered by our chaining DOM. So I just don't. It's important to make the distinction between the product itself and the building of the product. So just wanted to make clear the platform itself already is fully decentralized. So we're only talking about uh, building the project and stuff like that.
Right. You mean like kind of future updates and further improvements on the current product, right?
Exactly. Yeah.
Totally hear you there. I think then probably makes sense at this point to maybe, if you can, maybe shed some more, shed some light on kind of when exactly people can start using gains on Arbitrum. If you guys have a launch date planned out yet already, um, is that been announced yet?
Yeah, it hasn't been announced yet. So basically, we are really working as fast as we can. There was a lot more work than anticipated to make the new vault perfect. Basically, because as I said, it's the most foundational thing for the protocol for the coming years. So we had to review everything more than 10 times and make sure that there are no edge cases or any vulnerability or anything. So that took a lot of time. And by the way, the audit, the draft report for the audit with Halborn came in today, and there was nothing major, neither medium or minor, just a few informational comments. So it's looking great, but we barely finished the contract. So now we need to work on the front end for the new vault, finish a few other things like bridging the token and NFTs, and then a few other details related to the new architecture of the vault, and then deploy the contracts on Arbitrum. But yeah, so it's looking like approximately 3 weeks we should be able to deploy on Arbitrum. But once again, we're working as fast as possible, and we're never compromising safety, security, and for a speed of development. So it really had to be done this way. If it was possible to be done faster, we would have done it faster. I think we have quite a good track record on making regular updates. So yeah, looks like about 3 weeks.
And that's for the pretty much like a clone of what you guys already have on Polygon, or is there like something additional that we can expect on day one?
Yeah, pretty much everything that we have on. Exactly everything that we have on Polygon. So the trading platform, the vault, the staking contract for GNS, and yeah. So there will be another. So right now we don't have a clean way to have a single pool for all chains. So we are going with the simpler route of deploying a GNS staking pool on each chain. But we've briefly looked into doing a single chain for that and bridging the rewards and stuff like that. Same for the vault, by the way. And I think it should be doable given the state of cross-chain messaging technology. So yeah, so for the moment it's basically duplicating the Polygon contracts on Arbitrum, but with a new vault. And yeah, and then maybe in a few months or probably way later, like 6 months something, maybe we find a clean way to make a single vault for all chains, for example, or something like that, because that would technically be a lot more liquidity efficient instead of duplicating the liquidity. But you know, for the month, we don't want to delay the launch by another few months, of course. So we're going with that, and it's already more than good enough since our liquidity efficiency is already so high that it's just a few million DAI. We can really pour hundreds of millions of trading volume.
No, I hear you there, and it's kind of funny. I think I think I think almost every project kind of thinks the same way, where it's like you get all these like great ideas that like, in all honesty, like I'm sure would like make everything more efficient in every way, but it's like the time to develop, like audit, and make sure that things are like actually like ready for production takes, I feel like, a lot longer than we tend to expect. So you can just get caught up in like,
Yeah,
yeah, this cycle.
especially when you do stuff right. So
Right. No, I definitely hear you on that one. Is there anything else we can kind of expect? I guess post launch in terms of like roadmap for G Trade specifically, and you can sprinkle any of the alpha you wanted to mention, by the way, here if you want. Since we'll go to questions afterwards.
yeah, so I think the first priority after the new rules in the Arbitrum launch will be what we call the lookbacks update. And it's a really interesting one. It will basically allow our oracles to look at the past prices on each pair. And for example, let's say due to chain congestion, which I don't think is very likely to happen on Arbitrum because that's an interesting point, by the way. Arbitrum is really fast. It's like 0.3 second block times last time I checked, and it's quite a lot faster than Polygon on this aspect. So I think it will be really exciting. So the trade-off is the gas fees are a bit higher than on Polygon, so that way Polygon keeps its utility for anyone who is really who likes the Polygon ecosystem and who likes the low fees. But then we now increase our offering with slightly higher gas fees, but smaller transaction times. I think it's really interesting. I'm really excited to see trades happen in 1 second. And with the instant finality, it's also great because no rewards or anything. So yeah, I'm really excited to see our to try even myself the trading experience and to see our users trade, and it will be also really great combined with a secret feature we are working on, which I won't reveal in this AMA, but you know, it's coming pretty soon. So yeah, what was I talking about now? Yeah, the lookbacks update. It's going to allow us to guarantee all limit orders, regardless if there's a delay when they were triggered or anything, or due to chain congestion. That means that even if an order is triggered late, we can look at the past few minutes of price and still trigger it if it had to be triggered. So yeah, I think it's really, really interesting. And that's another thing that non-synthetic platform cannot do. So it's really the end game for our platform, guaranteeing every type of order, the exact price, and being able to look back a few minutes to see if the worst case there was a bit of a delay in the trigger for some reason. I think it's the end game. I'm so excited about this feature. Yeah. And otherwise, something that's going to be really interesting for Arbitrum users is that we're going to make a 100K trading contest once we release the platform on Arbitrum, not immediately after, so that we have like 1 week to see everything working well and if there are any small issues to tackle. But like 1 week after the launch, we will make a 100K trading contest so that it really becomes a no-brainer to try the platform. And yeah, if you want to try the cutting edge of DeFi and decentralized trading platforms, I think it's going to be interesting for you guys. So yeah, really excited.
I love it. I love it. All right, I think now actually we can maybe throw it over to the community for some questions. Quite a lot of people already actually requesting to speak. Let me
I
actually.
didn't reveal the whole alpha yet. Should we wait or?
Oh, oh. I mean, oh, let me think. Actually, hold on. I think you should reveal it just in case anyone has any questions on it. Just in case. What do you think? I mean, we can wait till the end if you want, just in case you don't want any questions on it.
Yeah. So I have. Yeah. Is I have a few interesting points, but pretty much everything is revealed in the first one. So there are lots of improvements in this new vault, but one of the big ones, and I think it will play really well with uh, our Arbitrum deployment and all the projects there. Is so the biggest improvement is one of the biggest improvements is composability. Right now, when you stake in our vault, you just cannot do anything. You don't. You just take your DAI and that's it. After, with the new vault, you will receive a token that represents your shares of your deposit. So you will receive a token called GDAI that represents your shares in the vault, and that then you can potentially do anything with it. And that's where all the integrations and the composability will come in. And that's why it's such a strong foundation for the project. It's basically we're making a new primitive, and then anybody can build on top of it. You can imagine, for example, earning more yield on it by staking it somewhere else, providing liquidity in an AMM, like you could do a GDAI pool, or you could use it as collateral to borrow some more DAI or anything else. Like it's really unlocking a new world of use cases, so that you just take your DAI and it's not done. Then you can still do something, and I think it's a crazy improvement. Especially, I think it will be so interesting to see projects building on top of it. So I'm really, really excited. That's the part I think our project was lacking the most, is the ability to build on top and to be a primitive. And yeah, it's going to be amazing. So that's the main. There are a few interesting pieces of alpha I didn't reveal yet about the vault, and you will see them in the article coming pretty soon. But that's a big one.
Oh, that's awesome. No, yeah, that's I I can already see the amount of integrations that's going to come from having a GDI come to existence. That's awesome. That's really good. That'll be
Yeah,
live day one.
that. I was about to read something else,
Okay.
but it's really, really cool. Like it will be automatically yield bearing, so like bearing, so that all the rewards, they just increase the GDI value. So it's basically like an over-collateralized stablecoin that is yield bearing as well, bearing. So you can see how big it is. I mean, we're talking a new yield bearing stablecoin. That's a new primitive. That's huge.
That's great. I think that's gonna. I'm like almost afraid the amount of different types of products that are going to come from GDI.
Yeah, and especially borrowing. I would really like to see borrowing, because that way, with the yield bearing part, your collateral will increase in value over time. So your health ratio on your loan should go up. Of course, if it doesn't go under collateralized, but you know, we have stats to back that our main assumption is true. That over time is just a mechanical fact, if we want, that traders lose. But that doesn't mean it's the goal, by the way. It just means that it's a fact. And instead of going into the pockets of people we don't really like and who operate shady centralized exchanges, that way it goes back into the community. So yeah.
Wow, that's great. I'm definitely sure that there's going to be a lot of questions about that actually in the community. Um, awesome. In that case, let me bring up then some people here. Actually, we have a lot of people requesting. Um, that may have been too much alpha. Okay. All right, bring up Eric, a classic community member. Uh, let's see how quick it takes for him to connect. I'll also bring up someone else in the meantime. How's it going, Eric? I think your mic is really low.
Yeah, we can barely hear you.
I can like hear you, but barely.
Okay, how's this?
Perfect.
Awesome. I was just saying, Hunter, you always host bangers, so thank you for hosting these. First, I guess I'll just ask one because I'm sure there's many people after me. Where I'm trying to figure out where does the credit risk sit in the protocol? It sounds like it's the DAI vault and not the GNS token holders, or I guess the other relevant party is the treasury. But just where does credit risk sit if, let's say, something does happen, for example, like bad debt? Like who bears the brunt of that?
It's a tough question to answer without revealing more details. I didn't want to reveal, but so it's on the DAI vault. But okay, I think it's impossible to answer without. So I think I'm just going to say it as well. So we found a really cool way to integrate back the refilling of the vault using GNS minting, which cannot cause a death spiral or anything. And that's true. So instead, before it was minting GNS and selling it on the market automatically, which is very dumb because it just creates downward price pressure, and it has an immediate negative impact. It's inefficient. It has a swap fee and everything. So, and also it wasn't. There was no hard cap, so it was way more dangerous. But this new feature is really interesting in my opinion. So the way it will work is, so by the way, we can decide not to enable it if the community really doesn't want, but I think it's really interesting. So we can make it so so it will be limited by a maximum inflation number per year, let's say 20%. And so in the short period of times where, for example, in the beginning, we don't have much over collateralization, so it's possible that we go a few times under collateralized. we could use the GNS token and mint it at a rate of maximum 20% per year, and then just make an OTC sale of it. So anybody could purchase it from the vault at the 1 hour TWAP price, and that would allow you to buy GNS without any price impact or without a swap fee. So in that case, that means the main risk is on the DAI vault because the capacity of refilling the DAI vault through the GNS token is limited to this 20% inflation rate per year. So the real answer is a bit of both. So since we use trader losses to burn GNS, I will find it really interesting that we use the GNS as well, the GNS token, help the vault refill faster so that we go back faster to over collateralization periods and so that we can burn them faster again. And so that it's a great deal for DAI stakers as well. That way the GNS token also bears a limited amount of risk from the positive PNL. But of course, we're not talking anything like the previous system, which could have a potential of death spiral, because I mean, what project has had a death spiral from 20% inflation, you know? So that's not something crazy. And the main difference as well is it won't have a direct negative price impact because it will be OTC. So it means technically it doesn't mean negative price impact. It just means slightly less buying pressure because it's a new way of purchasing GNS. Instead of using the liquidity pool on the AMM, you just purchase it through the DAI vault. So now that I've explained the new refilling system, the answer is a bit of both.
Got it. That's super clever. Yeah, because the previous design I think definitely had some death spiral risk baked into it, but this sounds closer kind of to the maker model of surplus buffer with MKR minting afterwards. And one idea to throw out there for you to consider is just you could potentially do something clever with Olympus Pro bonding vaults, just to go to the OTC point. But I will. Thank you for your answer. I've overstayed my welcome. I'm going to leave the stage now. Thanks.
No problem.
Your stay is never too long, Eric. No worries. Appreciate you coming on. All right. Bring it up.
I just wanted to add a point. I'm sorry on
Yeah, go for it.
the refilling system. It's by the way, it's if nobody buys the GNS actually from the DAI vault, there is no mint. So it's like you can mint up to 20% per year. So that's like 0.05% per day. But if nobody buys the GNS, then it just won't mint it. So it's optional.
Gotcha. That's for you, Eric. James, are you here with us? Or Marius?
Hey, yes, I am.
What do you got for us, friend?
So yeah, I'm degen trading right now in GNS. I got sucked into it at these bottoms, and I wanted to ask if there's a timeline, for these smaller features like the quality of life features, such as partial market close or limit close. Do you have any timeline on that, maybe?
Yeah, so the plan for the roadmap is look backs first, which should take something like 2 months, because we feel it's even slightly more important that we guarantee, take profits, stop losses, everything. So stop losses are already guaranteed on cryptos, but for example, take profits limit orders, etc. If there's a lot of chain congestion, it's possible that they're missed just because of the nature of blockchain. Like it's impossible to get a transaction through instantly. But with this model, it will be possible to look back a few minutes and to actually trigger the order even if it was late. So I personally think it's a even bigger quality of life improvement, and a few other community members too. But partial adding and closing should come right after. I agree. It's very, very important to manage trade.
Yeah, that sounds cool.
That being said, I mean, if the community really, really wants partial adding and closing first, maybe we could do it, but it will not be great because we already started working on lookbacks actually before the new vote. So I would prefer finishing lookbacks first. But so for partial adding and closing, it should take 1 month and a half, something like that. It's very hard to estimate, but I think within 4 months there's a very high probability that it will be released. So yeah.
Okay, cool.
Thanks for the cue. All
Thanks.
right. Are we cool to go to the end of the hour, by the way, Seb?
Yeah, perfect.
Awesome. Let's see. Bringing some people up now. 1 second, bam. All right. We got Kid Goku over here. How's it going?
Hey guys, how are you?
GM.
Thanks for bringing me on the stage.
Hey.
Thank you, Hunter. Thank you, Games Network, for joining us in this community call today. I'm Goku from Push Protocol, and I just wanted your thoughts, Gaines, if you had any thoughts on Web3 notifications and maybe how notifications can be used in G-Trade. Thank you for your time.
I don't I don't really have thought about it, and there's nothing really that comes to my mind. I'm sorry.
No, it's okay. Thank you for the honesty.
I like the little shill there. I think definitely something to talk about in the back end, I guess. Thanks for coming up, Kid Goku.
Thank you so much.
Let me see here. I think actually I see someone from the GNS community. Let me see something. All right, bringing up Vesnushki. Hopefully I said that correctly. You got the stage.
Sorry, I didn't have my mic on. So yeah, I was gonna ask in conjunction with the Luna situation in like May or something. Since then, we've had a lot of risk management implemented to the platform. Which I mean, today it's with the recent FTX events and everything, we've really been like protected from what could have been like catastrophic event for the dive vault. So my question is, Seb, do you like look back at the Luna situation, like in hindsight, that it was a good thing because it led to a lot of, in my opinion, really important risk management implementations?
Yeah, that's a really interesting point and question. So yeah, I think Luna is, to be honest, the best thing that could have happened to us, because so we already had some limits in place, like the max open interest per pair, but we don't have enough tools to manage the risk of low leverage trades open for a long period of time or a lot of exposure on one side. or price impact and stuff like that. So it's really the only thing that has allowed us to even grow the DAI vault during this period, which is crazy. I mean, I think there's like 300k or something like that more collateralization than before this event. So yeah, in hindsight, I think it's a really good thing that it happened so early. That way we managed to implement a solid risk management strategy very early. And now we can focus on the on the fun stuff, the new vault and everything. So yeah, I think it was a great thing.
Okay, thank you.
Thank you.
All right, hold on. I'm gonna bring on a DeFi enjoyer.
Hey guys, can you hear me?
Loud and clear.
All right. My question is about the risk management. So there is a max profit cap of 9x right now, and I want to ask Seb about raising or removing the max profit cap. So is there a specific point at which you want to remove it or raise it? Is it based on market conditions? Is there, a metric, a specific metric, the DAI vault, or for example, that has to be reached before you want to remove it? Thank you.
Yeah, it's an interesting question. So we chose 10x as a starting point because we had to choose something. I think it would have been unsafe to not cap them. It has really helped. It's an important part of the risk management strategy. That being said, if we really have a lot of margin with our risk management, then maybe we could tweak it and increase it. I'm not sure it's the most interesting parameter to tweak. I would rather, for example, reduce spreads if we can first. But yeah, I'm not completely close to changing it. It really depends on the stats we're building. But for the moment, it's looking good. Just not sure we will tweak this parameter for sure, but yeah. So it's possible that in the future it's increased, but it will never be removed because it is too strong of a guarantee and for risk management strategy.
All right, thank
And
you.
I actually don't think that many traders hit 900% often on their trades. So yeah.
Yeah, I ask because I like high leverage, and I take the risk of getting liquidated very fast, but then I want the I want
high risk
to have the
reward.
possibility, high risk, high reward, and the reward is capped. That's why I'm asking. But thank you. It's a great tool for risk management.
Yeah,
All right,
I
thanks.
think it's an interesting point, but I think most trading strategies, with a 10-to-1 risk reward, you can really have a low, probably like a low winning rate, and you will still be profitable. Like, I don't think I've seen many strategies that have a bigger risk reward than 10-for-1. So yeah, open to changing it in the future if it's possible, but I don't think it's a big limit for trading strategies. I'm quite familiar with it, and risk reward higher than 10-for-1 is I think it's very, very rare. So yeah, but it was a great question. Thank you.
Thanks.
Thanks for the question. I briefly got rugged there, by the way, so thankfully no one saw that. Are we cool with one more question, Seb, or do you want to close out here?
Okay, just one more.
I know your time is valuable.
Yeah.
We're gonna let on a fellow small brain here to kind of close us out with their last question.
Hello.
How's it going?
Hey, what's up? Thanks for having me on. I just wanted to ask one last question with regards to the new feature that you spoke about earlier. I didn't quite understand. You mentioned something along the lines of minting GNS and then selling that OTC. So could you just dive in a little bit more into that, into what determines when GNS will be minted and for what reasons?
Yeah, so for example, when the vault is under collateralized with the new system, GDAI's value would actually go down. The losses will be shared between stakers. The goal is really for people not to be able to withdraw more than there is in the vault. So if it's under collateralized, the loss is shared between all stakers, which makes the GDAI price potentially go under 1. So the thing is, let's say there is 10 million DAI deposited in the vault, and the vault is at 9.8 million collateralization. That means there is a 200k under collateralization. That 200k we can slowly refill by minting GNS and selling it OTC every day at a maximum rate of 0.05% per day, which is 18.25% per year, I think. So that means, for example, let's say we take the current market cap, which is about 100 million. That means a refilling power of 20 million per year, which obviously another collateralization period won't ever last a full year. Like it will only be. I mean, we got hit by Luna, and it lasted like 3 months or 2 months. So I think that was the worst possible event. So yeah, in that case, that 20% per year, that means 10 million per year. That's like I think I calculated at some point it was like 150k per day or something like that. Won't redo the math here, but so that means a 50k refilling power per day, potentially if people buy GNS from the vault OTC. And so that means, for example, in that case, in 4 days, the under collateralization could be covered, and then it can start building over collateralization again. That's how it will work.
All right, thank you very much. I really appreciate the clarity.
No problem. Thank you.
All right, Seb, thank you so much for all answering all those questions there. One last final one just to close out. For those who want to join the Gains Network community, or maybe even contribute in any way to the protocol itself, what's the best way for them to do that?
We're really the most active on Telegram, I think. So yeah, I think there should be a Telegram link in our Twitter bio. So yeah, there is a link tree, so you can click it and then find our Telegram, or it's also in the footer of the GTrade website. So that's really the best way to follow the progress in near real time.
Awesome. Well, Seb, I again really appreciate you coming on today, and we look forward to using Gains on Arbitrum soon.
Thank you. Yeah, it was a pleasure for me to be here as well.
Awesome. Well, you have a great rest of your day, and we'll catch y'all on the next one.
Yeah, have a good one. Bye, guys.